Hello, everybody, and welcome to today's Trade Smart Tuesday. Today, we are going to be talking about how to select the best stocks. And the reason why this topic came up today is because I've seen a choppy market. And I've not only that, I've seen a choppy market where there's been a lot of people talking on social media. Some of the people that I'm not going to name names, but some people have posted things on X, on StockTwits, on some of these other places where I'm looking at the same names everybody else is, and I'm looking at these names and I'm like, you know what? There's a bunch of things that are wrong with this idea. And I don't want to call people out. But what I do want to do is share with you some of my thoughts on how to not only select the best ideas and make sure that you're fishing in the right pond, but to also, once you find this idea that you think is the best, how to then verify that, you know what, is this thing actually as good as I think that it is? And so I'm going to share this two-step. There's actually 4 points altogether that we'll be going through today. Uh, because we have limited time here, I'm actually put together a longer webinar for this, and we'll do that on Thursday. We'll do a deep dive, and so I'm just going to put this link into the comments. And so, if you want to sign up for this longer form deep dive into selecting the best trades, well, we'll go for an hour, and that'll include Q&A. If you're interested in that, I just shared a link into the chat, so make sure that you go over there and you click that link and make sure that you're registered. It'll be on a Thursday right after the close. All right, so let's get into this. How can we make sure that the trades we select don't fall flat, that they don't do what this one did here, right? So here is one idea, OUST. I saw this one posted on social media. The thing that struck me was that I saw this one too. I actually had this one on my setups list over the weekend. And for those of you that have been following me for a little while, you guys know that I like to put everything that is setting up in one of the patterns that I follow onto my setups list. That does not mean that I'm going to trade all of them. But it is one that I'm going to do some more work into. When I took a look at this, I saw a number of flaws in it. And so that's part of what made me want to talk to you guys today, because the first thing that we need to do, right, in order to find the best stocks is to be fishing in the right pond, right? So, how do we fish in the right pond? The way that I like to make sure that I'm fishing in the right pond is to first run my screens, right? I have a wide variety of screens. They're all built in here. I put them all, I was using MarketSmith for a very long time. Now I'm using this platform called Deep View. It's fantastic. We'll do a separate stream on this another time, but I have all these different screens here that I run on the weekends, and I'm able to run them fairly quickly. And I use these screens to build out my universe list. So I run these screens, I come up with about 300 names. Of those 300 names, I'll go through the list and I'll narrow it down. And coming into today, there were 37 names altogether. And went through those names looking for setups. And I asked myself two big questions. And the two big questions that I asked myself are, number one, is the setup that I'm finding appropriate for the market type that we're in? Let me repeat that. Is the setup that I'm finding appropriate for the market type that we're in? Well, what type of a market are we in right now? we're in a very choppy market environment. Let me show you the major indexes. Here's a look at the major indexes. We have the S&P 500, the NASDAQ, the Russell 2000, the New York Stock Exchange, the Dow, and over here we've got the IBD 50. Now, what do you notice about these? What do you notice about them? Go ahead, type into the chat. Don't be shy. Type into the chat. In fact, I'm going to roll my little ticker thing down here that says, leave a comment. Let us know that you are alive. So please don't be shy. Go ahead, type into the chat. Let me know what you see on these charts here. I'll share with you what I'm seeing on these charts. The first thing that strikes me is that they're all moving in different directions, right? You have the S&P 500 and the Nasdaq. They're both dropping. They're both below the 50-day moving average. That red line, right? This red line right here. Both the S&P 500 and the Nasdaq, they're both below it. The other ones, they're above it, right? The Russell, the New York Stock Exchange, the Dow, they're all above their 50-day moving average. So it's like you have this tug of war going on, right? You have one index pulling this way, another index pulling that way, and the end result is a whole bunch of chop. Now you take a look at this over here, the IBD 50, and if you're a growth stock trader like I am, that's representing that, hey, most of the stocks right now are pulling in. Great. So when we go back and we start to think about, well, the pond that we're fishing in, is the setups that I'm finding the correct setups for the market type that we're in? Well, let's take a look at this one. OUST. Popular name. Was on my radar too. Well, is it in the right, is this the right kind of setup for this market type? Yes, it is. It's a pullback. It's doing what the market is doing. So would I trade this in this type of market? Yes. Okay, so you check off one box. Does that mean that I will trade this? Not yet. Not yet. We've got some more verification to do. So here's the next thing to ask yourself. Is this stock in a strong industry group? Because whether you know this or you don't know this, I'm going to just tell you, if the industry group that the stock that you're looking at is strong, that's one of those things that can put some extra wind in its sails. So if you're in a strong industry group, so you're seeing the other stocks in that industry group performing well, it has a very high industry group rank, or if not a high industry group rank, it's rapidly improving. So let's say that it's in the 100th ranked group last week, and then this week it's ranked 75. Well, that would be pretty good. That's a big sign of improvement. So you might go for a name like that. Taking a look at this, and we've got the group ranks right here. Well, right now it's ranked 77. Last week it was ranked 63, so it's doing worse. It's doing worse. So do we kick it out for that reason? Well, perhaps you might. Me personally, I wouldn't kick it out for that reason. That's one of the things that's like a minus on it, right? It's going against it. But I want to do a little bit deeper of a dive onto this one. So, what else is there to consider? Well, one of the things that I consider is step two of knowing if this trade is as good as I thought that it was. Because at the time, over the weekend, it was setting up like this. Right? So here's Monday. Here's Tuesday, right? So we don't know that that was going to happen yet, but this looked decent. And not only that, let's make this chart a little bit bigger here. It was consolidating right around the 21 period moving average. To me, in my world, that's pretty good. In my world, the 21 period moving average is one of the spots where leading stocks could find support. So I want to do a little bit more digging on this one. And the next thing that I do as part of step 2 to figure out how to know if this trade is as good as I thought is doing a multi time frame analysis. That means that I'm not just looking at it on daily charts. I want to see it on one above and one below. So for me, I'm looking at it on a weekly time frame, and I'm also looking at it on an intraday time frame. And the intraday time frame that I like to use is the 30-minute. So I come down to the 30-minute, and I don't know about you, but I could see fairly clearly that this is in making this descending trend line, that it has this mark here. Well, we could ignore this for right now because we didn't know this coming into Monday, but at least as of Monday, we knew that, oh, you know what? Price pulled back and it came back up and it's starting to consolidate around here. So we've got some levels to play against. Okay, great. What's the next thing to do? What's the next thing to do? Well, find flaws. Find the flaws on your main time frame. This is something that I think that we could all do, right? So if you're trading on primarily an intraday chart, then look for the different flaws on that time frame. If you're trading primarily off of a daily chart, like I am, then that's where I'm going to start looking for some of the more major flaws, or at least flaws that could tip the scale to say, you know what, not for me. So when I take a look at OUST coming into Monday, I noticed that I need to risk almost 9% to take this trade. For me, that's a lot. I don't want to risk 9% to take this trade. And why not? Why not? Well, why is 9% a lot? Is it because O'Neill once said to risk a maximum of 7 to 8%? No. No, that's not the reason. That's a good start, but that's not the reason why. That's not the reason why. The reason why is because when I take a look at my last several trades, I like to see how far they've run. And when I take a look at my last several trades, they haven't run as far. Now, why might the reason for that be? The reason for that is because we're in a chop fest. And when the market is choppy, trades don't run as far. So if most of my trades are only running about maybe 10% overall on the winners, can I really afford to be risking almost 9% on a trade? The answer is no. The answer is no, because we always want to get odds on our money. And if you're only getting about 1-to-1 reward to risk, then you're not getting great odds. If you only won half the trades that you made, well, then you'd bet a dollar and lose a dollar, win a dollar, lose a dollar, win a dollar, lose a dollar. And you're just in this perpetual cycle and you're not really making any progress, are you? But if you're betting a dollar to win $2, then you might win two, lose one, win two, lose one. And the math starts to work a little bit more in your favor. So for this particular trade, just seeing that point right there, how much do I need to risk on this trade? That's what's telling me, you know what? I don't want to take that one. But there was a couple of other things on this one that also said, you know what, this isn't the best trade out there. One of the things that I look at, one of the things that I consider on every trade that I take is this indicator right up here. These are the stochastics. And the way that I use the stochastics is to show me the momentum in the trade before it breaks out. If the lines are moving up like this, then it's showing me that, hey, there's some momentum here before price breaks out. And I might also see if price is starting, if these stochastics are starting to turn up ahead of a breakout. Look back here, right? Back on this day, back on, what does that say? July 8th. You see how both of these lines are just subtly turning up over here? To me, that's a sign that there's some momentum coming into this stock. And when is it coming in? It's coming in just ahead of it breaking out. Now, I don't know if it's going to break above the 50-day moving average yet, but it's starting to set up to. And seeing this is a positive sign. When I'm looking over here, I'm seeing both of the stochastics still negative. It's another thing that's, here's another negative on this idea. So there's a poor group rank, a worsening group rank. There's the poor stochastics. And I also have to risk 9% on this trade. So for me at that point, it's just like, you know what? On to bigger and better things. On to bigger and better things. Do we have any questions at this point? Well, let's go over to the chat and see if there's any questions that are coming in. No, not yet. All right. So we'll take a look at another name, but let us know what questions you have on anything that we're discussing so far. Type into the chat. Let us know. At least type into the chat and let us know that you're out there. Let me know that you're alive. Let me know that you're paying attention and that you're doing all right. We've got people watching over on X, over on YouTube. We even have someone watching over on Twitch. So welcome, everybody. And yes, drop in comments here. Somebody just put in a comment. BTO, is it possible that you've gone for every trade? Meant is the process that you go through for every trade. Might want to repeat that because I still don't understand what you mean, BTO. Do you mean that is this the process that I go through on every trade? Is that what you mean? If that's the question that you're asking, then yes, it is. Yes, it is. And I'd also say that it goes a lot faster than it takes to explain. Right? I think I'm going pretty slow. You tell me if I'm going too fast or too slow. But, well, when I'm flipping through these names, right? So just to give you an example of how quickly this stuff goes, right? So let me pull up my universe list. And I just did this. So I just built out my focus list for today, and I still need to go through and do what we just did a moment ago. But just to show you how quickly I go through this, right? So I have this whole list, my universe list, 300 names already sorted by the different types of things and qualities that I want to look for, and there were about 150 names that I flipped through. So what I'll do is I'll have these 4 screens open, right? So I have a monthly chart, a weekly chart, a daily chart, and a 30-minute chart, and I'll flip through these names. Right? So let's flip through some of them. Right? So I'm flipping through them at about this pace. And right now, as I'm flipping through them, My eyes are primarily focused on the daily time frame, this one right here. And the reason why is because we're in the middle of the week. And because we're in the middle of the week, price could pull back, reverse, set up. So I'm mostly focused over here. And the reason why I stopped on this one was because I noticed this outside positive outside reversal bar on the daily. So that made me think, you know what? I want to take a closer look at this one. But when I took a closer look at this one, the next thing that I did, my eyes went over here onto the weekly. And it's like, oh, you know what? This is actually fairly extended on the weekly time frame. So I'm just going to keep on moving. Right? And I'll just keep on flipping through these names until my eyes catch something that I want to do a little bit more work on. And this one here, Burlington Stores, actually did make it to my focus list. So this is one that I'm going to dig into a little bit deeper after we are done with this stream. But I'll also mention again. Well, this stream is really only meant to be a half an hour, which is fantastic to give you guys something every week, but it's not enough for this particular topic of finding the best trades. So I'll post this into the chat again, but I am planning to do a webinar on selecting the best trades, and it's going to be a deep dive. We're going to do this on Thursday, right after the close, 4 p.m. Eastern, and we're going to go for about an hour. About an hour, maybe if we go a little bit over an hour, that's okay too. But we're going to do an hour, plan to be there for an hour, and we'll include Q&A. So if that interests you, if you want to do what we're doing here today, but you want to go a bit deeper, sign up. I just posted the link. It's a free webinar that we're going to be doing. Let me know what other questions you have. Here's another idea that came up. That was another one that was popular on social media. I saw some people posting about this one on X. This one was also on my radar, which is why I'm bringing it up here. It's one called Shark Ninja. If you don't know what Shark Ninja is, they make they make blenders. So I've got a blender by Ninja. I have a food processor by Ninja. I also have. I used to have a vacuum by Shark. That thing died a long time ago. But I have an iron by Shark, and that thing has lasted maybe about 15 years plus. So I'm fairly familiar with their products, and I like them, which is one of the things that O'Neill talks about, and I think Peter Lynch spoke about that too. But this is a stock that landed on my universe list, and I saw it starting to set up over the weekend. So, or actually, I saw it setting up over the weekend, and I saw it setting up coming yesterday. Right? So, how was it setting up? Well, one way that it was setting up was in a potential double bottom. Not sure if this was a perfect double bottom, but let's see. I'm looking at this low versus this low. And you know what? This low over here did undercut that one. So this is a double bottom. Well, we could get into double bottoms and how do you tell a good one from a bad one in another segment. But this one was decent. The next thing that I would want to do is place the pivot right here. Right, so this right here, that's the classic pivot area. So price broke out of this on Monday. And it's tried to follow through over here today, but it didn't do that well. And this was one that I had it on the list for over the weekend, and I also had it on the list for yesterday. But in both cases, it was a good trade, not a great trade. And again, remember, we're in the middle of the chop fest. We're in the middle of the chop fest. The S&P 500 and the Nasdaq, they're struggling. They're struggling real bad. The other indexes, they're hanging on. They're consolidating. They look okay, but it's been a chop fest. Make no mistake about it. So, do you want to put your money into good trades or do you want to hold out for the best? Trading is one of those games where you could keep the bat on your shoulder for as long as it takes for you to get that fat pitch. So I'm not looking to take good trades. I'm looking to take what I see as great trades. And this one here, it didn't strike me as a great trade. It was good, but not great. Some of the reasons why. First reason, support is way down here, right? You have one up day, then you have the breakout day, then you have today as maybe following through, maybe not. But it's a good trade, but not a great trade. Why do I say that? Because if you're looking at structural support, meaning taking a look at the price action, the recent swing low is all the way down here. So if we're going to enter over here at the classic pivot, you need to risk 7.5%. If you're getting in and attempting to get in on the follow through, then you're risking 9%. Both of those are a bit much. Well, what if you placed your stop just under yesterday's low? Right? That not a bad idea. Not a bad idea. If you placed your stop below yesterday's low, you've got a few things working for you. If you remember what we spoke about a few moments ago with multi-time frame analysis, you at least have one day that could turn out to be the weekly low. You also have the 10-week line, and you also have the 50-day moving average that would need to be crossed back below. You also have some of the short-term moving averages that are all sitting right there too. So why not take that idea? Well, for one, you're risking 5.5% on that one, which isn't bad. But when you're looking at the follow through on this, and you're fairly close to the prior high, right? And you might start to get into some trouble right around here, right around the $81 level. Is it worth the risk? At this point, it's a one-to-one trade, right? But when you're trading a double bottom, you're trading it for much more, right? So let's say that you're targeting 100. What I also like to factor in, aside from my ultimate target, which let's just say that we're looking at it moving to about 100, right? Maybe 30%. That might be a little bit much. Maybe you're looking more at 90, right? 90, 95, 20% move off of a double bottom. Let's say that you're targeting somewhere around there. I would still want to know what the first level of resistance might be. The first level of resistance, the first spot where price might start to get into a little bit of trouble is way down here, right at the prior high. So the question that I need to ask myself is, are we in the kind of environment where price is more likely to stall out? Or are we in the kind of environment where price will get through that like a hot knife through butter? What do you think? I think that This isn't the best setup. I think that when we dig a little bit deeper, you might even see that, oh, you know what? The price, half the price action is below the 10-week line. That's not so great. On the right side of the base, volume is a little bit elevated over here. That's not so great either. Normally, we want to see volume drying up on the right side of the base. That shows that supply is no longer coming to market. These are things that could be overcome if price were to break out strongly, but are we in the proper environment for price to break out strongly and for it to overcome this kind of stuff? I personally don't think so, and it's why I held off. And this is the market environment that we're in, the chop fest. It's not to say that I'm not putting on any trades. I'm being very, very, very selective. Here's a trade that I did put on. I put this one on last week. Those of you that are in our research program, you already know this. We've been talking about this one for a little while here. BTSG. What do you notice about this one? What do you notice about the group rank? Very strong group, isn't it? Right now, the group rank is 11. Last week, this says that it was 12. It's pretty good. Very strong. At the time of the breakout, was getting into fairly close to new highs. If we take a look at this one over on TradingView, the risk on this one was 4.5%. Not bad at all. When it broke out, the 10 EMA was supporting the low. That's something else that I like to see. I like to see at least the 10-day exponential moving average supporting the most recent lows. And if you're somebody that likes to use the 50-day moving average or say an 8-day moving average, all those things are perfectly fine. What you want to do is have a certain moving average that you use and just you leave it on your chart, and then you start to understand how the types of setups that you look at respond to different indicators and different moving averages. So for me, I've noticed that the 10 EMA is one that typically tends to be a good one for the trades that I like. And so this trade had a lot going for it. And I'll also share with you this here. Right, so this is my playbook, and for every trade that I take, I'll grade the trades. Well, we'll talk a little bit more about this kind of stuff on Thursday during the webinar, but I'll grade my trades. And this one scored a 7.98 on this tool that I have called the Trade Gauntlet. This is also a free tool, and we'll go and we'll talk all about it on during the webinar. But it's basically this big checklist of close to 100 different things that I'll go through, and I'll check boxes for all this stuff. And it scored a 7.98 out of a best of 10. So it passed. It passed pretty well. And so that's what gave me the confidence to go in on this one. Now, you might be thinking, man, 100 checkpoints, that sounds like a lot. Yeah, it is a lot. If you're putting your hard earned money at work, don't you want to be thorough about it? I know I do. But it actually doesn't take as long as you might think to get through these things. So it takes maybe about 5 minutes or so for me to go through the entire 100-point checklist. But one of the reasons why it's so crucial to build a nice filter for ourselves is that way we're not going through and putting all the whole universe of 300 some odd stocks or however many stocks are on your list. You don't want to put every single one through this giant checklist. You just want to be able to put the best of the best of the best, which is why we're doing this live stream today. It's why we've got the webinar happening on Thursday. So once again, make sure that you're signed up for that. And yeah, that's about it. Well, we're a little bit over here. I see a question just popped in from BTO. Do you do this work manually for every entry? Yes, I do. Yes, I do. For every single trade that I'm going to take, I want to make sure that I've verified that this trade is worthy of my money. And so it's important for us to treat our trading not as a hobby, but as a business. And the way that we do that is by developing a robust process that we're going to do every single time. Every single time. So that way we make sure that, yes, this is the right trade given this market environment, and it's one that's proven to succeed. Not that every single trade is going to make us money, but if we take 100 of these, at the end of the 100, we'll have a lot more money than what we started with. That's the idea. And with that, we'll wrap things up here. So I want to say thank you all so much for joining me today. It's been awesome. And I'll throw in one more time. Make sure that you are subscribed to the webinar that's happening on Thursday. Register for the webinar. It's a free webinar. We'll be doing this, but we'll be going a lot deeper. So if you got value from today's live stream, you're going to want to sign up for this free webinar. Yes, the webinar will be recorded, and for whoever signs up for the webinar, we will send you the recording. So sign up for it, and I will see you on Thursday. Take care. Much love, and God bless everybody.